This is David Patrick, Fitzstock Charts weekend market video analysis for January 11th, 2020. We are in a 21-day uptrend. I think we've had 21 uptrends in 21 months, basically. We keep getting spoiled with the market, and yet there's so many average retail traders, institutions, and gurus out there that are not aboard the market. And I shake my head, but be honest with you, if they were aboard, it wouldn't be this easy. So with that said, we trade the simplest trading methodology in the world. The simplest. It will not get any easier of a methodology on just trading trends. We increase the probability by looking for relative strength, scanning hundreds and thousands of charts, trying to find those patterns that repeat themselves. We'll go over two of them in this video. Apple, we hit it out of the park last year. Tesla and Shop. We just talked about that. And by the way, we hit it out of the park with the historical chart pattern comparison and Xilinx last year, which was one of my best trades of the year. With that said, where are we in this market? What are we going to do right now? Well, I say it all the time. I'm going to say it every single day. Stay long versus your stops. It's the simplest thing in the world. You get stopped, you get stopped. You don't, you stay long. How could it get any simpler than that? Everybody wants to be smarter than market. Everyone wants to put in all these extra hours thinking they're going to get an edge. Let me say 99% of those people are not getting the edge. You don't need to be smarter than the market. You just have to ride the market's trends and look for relative strength to try to outperform the market, which we have. We've had huge numbers doing that. So we just went through the week before OPEX. What is the week before OPEX? It's the week before monthly option expirations, third Friday of every month. So that second week of every month is the week before OPEX. What happens the week before OPEX? Often, I would say 80% of the time, lately probably 90% of the time, market hits some sort of quote unquote pivotal lows. What does pivotal lows mean? It means it pulls back from an area, and usually those lows hold for multi-weeks, sometimes multi-months, sometimes longer. Are those lows ever broken? Sometimes, yes. It's part of trading. If we had a foolproof way to trade, everybody would already be doing it, right? But it's another little trading edge that gives us another advantage, increases our odds of trading. That's behind us now. I remain between 125 and 130% long, 35% long market exposure. You know my positions. I post all my positions. Spiders, SPXL, TQQQ, Apple, Google, Shop. And I want to reemphasize this service has never been, ever, about my personal trades or my personal positions. It's always been about the focus list. That's what I spend all my time on. But you guys requested early when we launched the service that you wanted to know some of my personal trades. So I post them. But that shouldn't be the focus. But you have an idea of what I'm in because I post them. And you see the daily updates, which shows my existing positions. Don't use it as your focus. Your focus is the focus list, ESFL, that comes out every day. Okay, let's see here. I got a couple. I always like to go over a few subscribers' comments or questions. Let's get to these numbers real fast first. 2020 contracts, the January and February contracts, we have 55 of them off the ESFL that are engaged. 3 no scales, 2 losers, 50 winners is a 90% win right now with January and February contracts, 2020 contracts. 24 of these are in the 90% club, 5 triplers. Remember, we batted 89% last year. So we're never going to have a sustained win percentage at that. So let's enjoy it. Because like I said, the goal is long-term is to have over 75, 3 out of every 4 trades. So we're well beyond exceeding any kind of expectations. And when that happens, you better be outperforming the market. Or you better be at least performing with the market, right? Not fighting trends. Like it seems like I get a question every day on Twitter. what do you think about shorting something, something? I almost lose my mind. Because, yeah, you can short stocks and you can certainly short the ES with 5-minute rules of engagement, which seems to pay every day. But I hope that's not your focus in an uptrend. Otherwise, I don't know why I'm doing the service. Numbers are unheard of, off the charts. Before we get into historical chart pattern comparisons, by the way, there's Tesla. In fact, let's just do these right now. Tesla, I have not updated this. This is when I first gave you Tesla. I said, Tesla looks good. It's bull flagging here. And I said, you know what? It looks a lot like, I think it was, Apple of 1991, as crazy as that sounds. Broke out just like Apple. And I said, if it's going to do the same thing, it's going to go to $500. And this is not updated, and that's exactly where Tesla went. $500. Unbelievable. 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 Right? Congrats if you took it. Here's another one that I have not uptraded the chart. We have Shop on the left, Apple on the right. I think this is Apple of, I want to say 2005. I can't remember the year. Anyway, you got some breakouts. You got some breakouts. This is what I said. This is what happens when you do these consolidations, right? You thrust higher. And I didn't update the chart on Shop, and you'll see that in a moment. 435 already. Up here already. There's your thrust. So we got one of these right there. We got one of these right there. I hope you took advantage of it. I know I did. I'm in the calls. I plan on exercising if this thing keeps going higher like Apple did back in then. So we're hitting it out of the park again with historical chart pattern comparisons, with rules of engagement, with trading market trend. I mean, it's I don't want to say it's easy, but you know, lately it's almost been scary too easy. And it seems like whenever I come close to saying that word easy, things always get really rough. And so I don't want to jinx the market, but we are at some point going to be due for either a drastic pullback or significant volatility to really shake things up, because realistically things are not this easy all the time. And you don't get periods where you just grind up and it's, you know, people are saying, oh, the market's manipulated, oh, this, that. It is what it is, you know. It's the market this is the hand we've been dealt, all right? Sometimes we get dealt a bear market hand like we did in 08. You have to play the cards that were dealt to you, right? Why would you fold this winning hand? So stay long. So before we get into that historical chart pattern comparison of 1925, let's see here. Someone asked me, let me make sure my audio is on. Okay. Someone asked me scale and add. Well, someone made a comment about Market Wizards. Market Wizards is a book I actually recommend reading. It's on, I believe it's on the website under subscribers at the way bottom when I first launched the service. It's a great book. I think there's about 4 or 5 books we were made to read at the hedge fund when I worked there. I believe that was one of them. The book talks about pressing your winners, adding to winners. And I think I posted something about we always scale. And someone had said something like, well, that's not what Market Wizards does. Well, first of all, I am unique. I never want to ride anybody else's philosophy or way of trading unless it's, you know, an amazing methodology. Then I would obviously look at it. But that's exactly what we do. It should be crystal clear by now. We engage, we scale, we wait for a bull flag, and we add. And I'm not going to go over that with this video because I could go over a million times where we did that. Enter, scaled, bull flagged, add on price strength confirmation. All you do is look at the 90% club and you can see, you know, Apple was on there twice in the last 2 months. Shop. These were all ones that bull flagged above our breakout and we added. So I don't know how that could ever be a question of how we're different than what a really good book, by the way, was saying, because it's precisely what we're doing. Allocating to expensive stocks. I got a lot to go over here. I don't want to spend too much time on this. my opinion, when someone says something like that, how do you allocate to something like Booking, which is an expensive stock? So you got to be careful with the terminology using expensive stock. What does that even mean? What does expensive stock mean? Because it has a high stock price, it's expensive? See, I don't like that terminology at all. You could say overvalued if you think it's overvalued, but expensive means nothing at all. Because you could split, whether it's Google or Booking, you could split to a 10-for-1 split. Does that make it not expensive anymore? Maybe that's the perception that retail thinks, and that's why they used to split stocks back in the day. But it's meaningless. It's all about percentage return. If a $1,000 stock goes at $2,000, you just doubled your money. Just like a $10 stock went to $20. It has nothing to do with how expensive a stock is. It means nothing. So allocating to an expensive, quote unquote, expensive stock, I don't know how to answer the question other than what does expensive mean? Is it PE ratio? Is it market cap? Is it growth rate? Is it the stock price is too high? Because the stock price being too high means nothing unless you're talking about overvalued. So in reference to allocation on higher priced stocks, it's going to be the same thing. You know, if you're allocating, people think they have to have 1,000 shares of something. If you're allocating $5,000 each position, you just take the 5,000 divided by the stock price. If you own 10 shares or 10,000 shares, it doesn't matter. It's all about percent return. And in reference to the options, because there's some of these options you will notice are not that liquid. And then just don't take them, or you can split the bid or ask, or go 75% towards the ask. If there's a $22 or 20 bid by 22 ask, you know, bid 21.5, not right in the middle, but 75% towards the ask. Try to get a good fill if it's not liquid, if you're doing the options. But as far as allocation towards an expensive stock, it's not an expensive stock, it's a higher price stock. It's going to be the same allocation. Sorry to spend too much time on that. What else? Don't interpret news. Sometimes I get worked up. I was actually on the road for a few minutes, and I brought my phone with me, and I had the YouTube TV on, and was watching non-farm payroll as it released, and listened to what they have to say on CB. I respect those are professionals. And then I go do my thing in the morning. I don't stay glued to the screen from 8:30 to 9:30. There's nothing to do. And that's a big mistake, by the way, if you're doing something. So I go to the gym and I'm on Twitter and I'm reading, I'm not going to say who, but there's people or institutions or whatever, professionals, gurus, basically, bashing the non-farm payroll number. I just shake my head because, number one, why are you interpreting it? Let the market interpret it for you. Number two, how could you possibly have a bad perception of the non-farm payroll number? I don't get that. To me, it makes no sense. We're at a 50-year low with unemployment, 3.5%. We created like 130,000 jobs. So you're going to scrutinize the manufacturing sector? Whatever. It is what it is. Like I always say, trade price, don't trade event or news. And don't even try to interpret it. Because I can tell you, maybe even my interpretation, which is bullish, by the way, is spot on wrong. But who cares? I'm just going to follow price. But just seeing opinions on Twitter is just almost comical. Don't trade the news, trade the price. We're in a new year. I talked about last year means nothing. We're in a no excuses market. Don't make excuses. Start fresh. Use the ESFL. By the way, use the top of the ESFL. The bottom are stocks that have already triggered. So what if a stock's triggered and it hasn't paid us yet? Can you still get in it? No, because it should have paid us. Stick with the top ESFL. Don't go off the grid. We already talked about that in the last video. What else? I think that's about it for right now. Let's look at, here's 1925, historical chart pattern comparison. What does HCPC mean, historical chart pattern comparison? Well, price repeats itself with price pattern over time with emotion, psychology of the market. We trade those patterns, bull flag, bear flag, WV, MA tops, breaking downtrends, breaking uptrends, head and shoulders, inverse head and shoulders. We trade them. Those are the big ones. What's our best? Bull flag to new highs. Grade your trade is under subscribers, the menu section of the website. You can grade any one of your trades, see if it's a 10-star ROE, 8-star ROE. I try to put the highest ROE, star ROEs on the ESFL. That's what I do. try to leave you with zero work. But if you want to grade your trade, by all the means, it's out there. So do all historical chart pattern comparisons work? No, obviously they don't, but they give us an edge. We've used a ton of them. We just showed you Tesla. We showed you Shop. We used it with Apple last year. We used it with Xilinx. We used it with many trades. And now we were looking at 1927. Lately we've been looking at 1925. And yes, all of these patterns will eventually diverge. What does that mean? It means they look like they're going to repeat themselves, and all of a sudden our current market goes drastically against what that pattern says. It diverges. They're all going to diverge. You can't repeat forever. Back in 2008, when I had my best year trading, that stayed on course to that panic in 1907 for 18 months, which was amazing. And it diverged drastically. And if you fall in love with a price pattern that you think is going to continue forever, you will lose eventually. So this pattern will eventually diverge. Until it does, we're going to continue to use it. 1925 Dow Jones on the left. I have the S&P on the right. We saw this MACD bear cross. And by the way, I've been posting... I don't know why I pay attention, but sometimes I post the daily, not the daily update, but closing notes on the regular Twitter account, not the subscriber one. And some people were saying, well, you got bearish divergence with MACD. We're going lower. And you can go higher without MACD. We've talked about that. And bearish divergence means nothing. We've talked about that too until what? So you see follow through on the downside and you break pivot areas. We've talked about that until I'm blue in the face, so that's fine. So yeah, we are hitting new highs. It is bearish divergence, new highs without MACD, but MACD's heading in the right direction, MACD bull cross, and we're still in this wedge pattern just like 1925. We can go above 3,300 really to get outside the wedge. And by the way, it looks like you got outside the wedge here, and what happened? You stayed outside it for a little bit, then came back in, and then went higher. Came back in and went higher. This market went a lot higher, a lot. And so why can we not go to 3,400 or higher? We can't. And that's what I've been saying. My bogey is 3,400. My minimum bogey in the short term was, I think, what, 3,340. 3,340, somewhere up here, which would be at the top, which would mean if we got up here, yeah, you can let stuff go in the short term. So, if we get above 3,300, between 3,300 and 3,400, if we do, who knows if we do, but if we do, yeah, I probably will start lightening up, not to be bearish, but you'll be stretched. We don't trade overbought markets. We don't short them, but we'll lighten up into them. And right now, if you look at, oscillators, I don't know about the sentiment indicators, but NIMO and things like that, we're not overbought at all. So anyway, I know we're 18 minutes in, we haven't covered any stocks, but once again, there was a lot to cover on just, some comments, some things in my mind, our numbers, the way we trade, historical chart pattern comparisons. So let's get right into the market here and change this and change this. Okay, so there we are. We're in a wedge pattern. Does that mean it's bearish? No. Does it mean that we're going to come right back to the middle or the bottom of the wedge? It's possible. When we talk about this, because, I have new subscribers. Now, it's not like they're flooding in, but when the new subscriber comes in, sometimes they ask me, what do I do? I'm all cash or I'm short. Basically, I say right away, get long and define your risk. So if you're risking 10 grand, know what you're risking versus, right? So we know this is our line in the sand, 3,070. You're not going to stay long past that. This little breakout candle right there, this low, was 31.38. 31.38. Okay, let me write that down. And what did we say this one was? 3,070. Let's delete this. Oops, how do I'm not gonna, whatever. That's just 2020. So these are the levels that you would get stopped at. I probably would use, if I'm a newcomer, worst case, I would use this. The problem with using a stop down here is it gets you out early, but what happens if we get to the bottom of the wedge and we bounce? I would rather have you put on smaller size and have a wider stop down here. So 32.80 yeah, you're risking 150 handles now. What is that, 4.5%? I think. So go back and look at the videos we've been doing, and we talk about reward risk. Reward risk was great here, right? Huge reward, huge reward. Well, every time we grind higher, we have less reward, with our bogey, meaning what would we have, 3340, and then ultimate bogey of 3400. Yeah, I mean, your reward to risk is becoming less. And the deeper you get on an uptrend, obviously you have more risk. So we're in a 21-day uptrend. We were in a 44-day uptrend last year. So we could easily double this. But yeah, this is why I always pound the table on get long early the market. ETF, spiders, QQQ, SPXL, UDOW, whatever it is that's showing relative strength, get long. Specifically, just get long the spiders of the QQQ, or spider calls, or TQQQ, or SPXL, or QQQ calls. It's real simple. Get long the market, then allocate accordingly using the ESFL and or some of my trades that I get in. All right. So I know I'm rambling on. What do we have? We have market at new highs, MACD not at new highs, slight bearish divergence. It means nothing until we come down here and break this. That level is 32.12. If we break 32.12, you're knocked out of trend and things are going to get much sloppier, no doubt. NASDAQ, all-time highs with MACD. And yeah, I mean, you could probably make a point. What is RSI? RSI, I hate looking at RSI, but you're up here at nosebleed bleed levels, and it is extremely difficult if you're not long the NASDAQ to get long the NASDAQ up here. And every day will be more difficult. So maybe you can do it with options and or just put on a smaller amount and use your stop of for the NASDAQ right here, this low, which is 86.33. So use your stops, allocate accordingly. Let's fly through some of these things. IWM continues to underperform. This was on the 90% club when we nailed it back in here. I don't like it for an ad. MACD's heading lower when the market's heading higher. It means it's just underperforming and it's not going to be what I'm looking at. IYT is interesting, and I'm going to be honest with you. I actually think this is going to go to new highs. Obviously, if it would break this low, that would be ugly. But this looks like it could be a grind to new highs. I like when it leads, but like I said before, as long as the NASDAQ and or the industrials are leading, I think we're fine. What about the XLF? It's grinding to new highs most likely, but MACD is at multi-month low. That is a tough new trade, a tough ad. I would leave it alone. IBB back into, it looks like an uptrend. This is very encouraging. We might start to see some stocks in that sector wake up. Do we look at the Dow? Dow looks good, new highs. MACD just sort of grinding. They don't love really that. Gold, that hit new highs, and I just wouldn't be adding to gold. I said this, that I would let this thing consolidate, and if you miss the next run in gold, you miss it. We hit it out of the park with this thing recently. I wouldn't add. Bonds continue to be in that same old trading range. So let's get into our stocks. I'm long Apple. I had a bogey of 300 in Apple. So now what do you do when you're just beyond your bogey? Do you just sell it? Some people do, and that's fine. I don't really have an upside measured move with this thing. This thing's at outer space. It literally is. I've seen euphoric parabolic charts like this before. They just keep going up. And by the way, you could say Apple was quote unquote an expensive stock. It's $300 versus something like what's at least trying to think of a cheap one. Applied Materials is $62, or actually a lot of these stocks are expensive. If you're looking at the number, the share price. Once again, getting back to that question, if something's trading at, what is Booking trading at, by the way? Why do I not have that up on my chart? What is Booking trading at? KNG. 2093. That share price is significantly higher than something like Apple. I just don't think the term expensive is just hard. It's just a higher price stock. Anyway, why can't this go to 2000? Well, it can't, first of all, this year. market cap wise, because it would be insane. But with that said, why can't this go to 330? Why can't it go to 350? Why can't it go to 400? It certainly can. The risk reward to putting this thing on for a new trade is not compelling at all, especially with earnings coming up in a few weeks, I think. So you at this point, all right, you've had all these trades in Apple. At this point, you have to wait to add to Apple until after earnings. So we're going to be looking at other places. Ride it with stops underneath. Amazon. This is a nice bull flag. It's grindy. MACD is really good here. It's slowing down. Doesn't do anything wrong. I like Amazon. It needs price strength confirmation. Another leg higher. Netflix slowing down. MACD's flat. I don't love that. The high-priced booking still looks really good to me. MACD's not a new high price is. I think this thing's going higher. So take it for what it's worth. Tesla. So yeah, Tesla can still get to this 100% fib extension, which is the measured move. I said 500, basically got there. We're not going to pick a top with that. If this thing consolidates a couple more days, you probably could buy the dip on it. The problem is adding on price strength confirmation to get to that bogey. There's just not much meat on the bone left. There's 20 bucks. It's like nothing. I mean, that's not going to go up 20 bucks in a day. So it's a very, very tough new trade long here. Once again, just ride it. I wouldn't pick a top. I don't think it's done going up. It's just a very difficult add. Facebook looks great. This was in 90% go. I think a couple more times than I have it here. I need to add it. And this thing could be resetting up again. I really would like this thing to pause for a couple days, but to be honest with you, it's a phenomenal looking chart. Google, I'm long Google, and it's another phenomenal looking chart. It goes higher. I'm not going to pick a top with that. I'm not going to call it expensive. It's a high price stock, and it's got a high growth rate. And to be honest with you, well, we're not going to get into products, but I do like the YouTube TV, which I just started using. Let's see, Google, NVIDIA. NVIDIA looks great. One of the strongest in the sector. I like it a lot. Texas Instruments, I like. Intel, underperforming, not so much. AMD, I like a lot. MACD is heading down. It's a tough ad here. Micron hit new highs without MACD. It might consolidate. I think these are going to be buy the dip candidates. Avgo rolling over. OLED, just a grind. Xilinx, a grind. So this sector looks okay. I like Micron, AMD, and NVIDIA probably the most out of all of them. I am watching this Texas Instruments. It looks like it wants to break out the new highs. That might actually lead this year. Microsoft, I love. I've been saying I loved it for a while. Continue. It's a leader. It's just grinding, and grinding seems like it grinds higher every day. Let's look at these software stocks that led last year. Adobe, bam, this thing's going out of the park. Coop, nice one. Now, huge. CYBR, that's a massive move. I think that's a 9%. Team, I think that engaged here on Friday. Jobs, Workday, they look okay. Twitter, I think, looks not so much. What was the other one? Oh, Snap. Snap. Then what is Roku doing? Roku's in this trading range that we talked about. It's underperforming. That's why you can never fall in love with a stock, because the products. I use Roku. I just bought 4 new Roku sticks for my TVs. That doesn't mean I'm long the stock, right? It's the same thing as Apple in 2013. They had great products. Stock got cut in half. You can't fall in love with stock, right? Roku stock just doesn't look great here. It doesn't look bearish. It's not leading. It's not paying anybody. So let's wait till it starts leading and starts paying somebody before we're going to make it our focus stock again. Baba, new highs. And it seems like all these are hitting my bogeys. Apple hit 300. Tesla basically hit 500. 220 was my bogey on Baba. It's like we're just blowing by these bogeys. And yeah, we're getting to scary territory. We saw, why don't I just look real fast? I'm going to go back to Baba. Let me just pull this up because, and I don't think this is happening, but talk about picking like tops. You never want to pick a top in a market. Remember if you guys traded it, I know I did. Do you remember this 2000 bubble in the NASDAQ went up to 5,000 from, it basically doubled in what, a year. But look at this. Just can you imagine trying to pick a top, just saying, "Oh, we've gone too far, too fast. The market's manipulated. The non-farm payroll wasn't as good, and this and that, and you fought it the whole time." That's what this market, and I don't think, by the way, that this market's going to double anytime soon. But that's what our current market reminds me of. And by the way, I probably, you look at this NASDAQ in 1999. I know I'm babbling here, but look at measured moves. Okay, so there would have been the measured move. Then you would have said, "Dave, what's the next side, the next bogey?" I'd have said, like, I don't know. We already hit the measured move. And look at the thing kept going and going and going. And that's what can happen with Tesla or Apple or Shop or, like we were just talking about, Baba, right? So we don't want to pick a top because we could be, as crazy as it sounds, in the beginning stage of a euphoric market that ends up bubbling somewhere. And we don't know where. So we want to stay long. So I'm not a permeable. I don't want anybody to think that. I'm just trading the market that's given to me. Right now, it's been bullish, so I'm staying long. Baidu continues to look very, very, very good. NTES, breakout to new highs. That might be setting up for an ad. VMW, they're lagging a little bit. We talked about the CME. Once again, there's stocks that I talk about in the video that aren't on the ESFL. Doesn't mean you can't take them. If you see them on the video and I show that there's rules of engagement, just like we did back here, you can take this thing along. As I'm scanning and trying to only come up with two stocks every day, and I'm going to give the 10 and 9 star ROE picks if I can find them. But there was an Uber trade from the other day. The CME looks like it did pretty well since we talked about it. So whether it's on the focus list or not, you can take these long as long as they have your rules to engage. Shop. Oh, this is unbelievable. This thing is a beautiful price pattern, and we hammered it. And to be honest with you, if it rests, which it might not, next time, if it continues that same pattern that we saw, it will rest. It might go to 450 and then pull back. When it pulls back and rests, it's going to reset up again this month. So Shop looks really good. What else? Oh, ICE. I'm surprised ICE hasn't paid yet. CBO is rolling back over. Let's look at the banks. JP Morgan, Goldman Sachs. Goldman Sachs looks really, really, really good. I'm surprised. That does shock me because Goldman Sachs is really leading this year, big time. MasterCard and Visa, like I said, if you like the sector, I like those two the best, along with Goldman Sachs. And I think PayPal still looks pretty good. So those all look good. What about this Beyond Meat? What's that doing? Another one we talked about in the video. It bull flagged above the 50. The 10's above the 50. It's bull flagging, and you got a Yahtzee. This is not in the SFL, but you finally had rules to engage here. So this is a nice move on Beyond Meat. And if you took it, you scale it, and you hold it. Did we look at Palo Alto yet? That's just grinding. We looked at all the banks. What about the casinos? That one looks really good. LVS probably looks the best out of all of them. So they look all right. Let's look at the oils. COP, I don't like. PSX, that is just a nasty pullback. CVX, no. Halliburton, no. I thought there was one. Was it Schlumberger? No. Oxy? Yeah, Oxy actually looks pretty good. I don't love any of them. Let's look at the sector. And remember, I said I like the 50 above the 200 and then price to get back ideally above there. Then there's going to be momentum in the sector. It's just like the banks. You got to trade that sector when it's hot. And there's going to be huge moves intraday here and there, but that sector's still not hot. What about Amgen? Getting better, but not MACD. Guild, Jazz, ISRG. They're improving. ISRG, new highs without MACD. That could be setting up for price strength confirmation to add if it sees price strength confirmation. REGN, just a grind. ALGN, that looks okay. Twillo. We talked about how bearish this Twillo looked, and we said when it came out here and bull flagged above a downtrend, we said you can't be bearish anymore. This is actually probably going to squeeze the 200. It had rules of engagement, and prices ripped. You can't add up here. We're too close to the 200 SMA, but this is a really nice looking head, left shoulder, right shoulder, inverse head and shoulders that if you fell in love with the short side, you could have got burned, right? What's CMG hitting? New highs a little bit, But MACD is flat. I like when the MACD is headed up on that one, and it's not. UI doing nothing. DBX. DocuU, grinding. Lyft. Uber. So yeah, Uber we talked about. Remember I painted this price pattern that this thing could do this. And you had your entries here, even though it wasn't the ESFL, we talked about in the video. And you had your entry if it got above there to add. So, you know, your next bogeys are maybe filling the gaps up here to 37. So this still looks good. I don't know if it'll be on the ESFL or not, but you know you have rules to engage long. So what else? QRVO. Interesting. It's not really doing too much about AZO. Work's improving. LK. Well, this is another one that was on the video. I said above here you could take it long and engage. We talked about a bull flag, add-on price strength confirmation. You're scaling. It fell out of trend. I said now you got to wait. You got to wait for price strength confirmation to put this thing back on. You saw your price strength confirmation at 40. Now it's 10% higher and it's bull flagging. So yeah, it's probably going to be on the ESFL this week. And I don't use that word expensive that we talked about. It's starting to get a little pricier, right? But it's going the right direction. It's bull flagging the new highs with the MACD. And you're going to treat it like every other trade. You put it on, you define your risk, and you move on, right? So it looks good. I thought there was another stock I want to talk about. I can't remember what it is. Oh, well, let's just finish with our SPX. We talked about a lot of things in this 36-minute video. We talked a lot about our rules and what we do, how we do it, and what we're supposed to be doing, and let's start off on the right foot this year and do the right things if you didn't last year. So I know sometimes I can be pretty loud in these videos. I have a lot of passion for what I do, and I strive hard to succeed and provide the best information in this service as I possibly can so you succeed. So often I'm going to be loud and passionate about what I see and what I want everyone doing. And, you know, will there be pullbacks in this market? Absolutely. I'm speaking to you at 11:24 on Friday. By all means, this market could be blood red by the end of the trading day, right? In this video, you're seeing things are green. And this is one of those days that you're not supposed to be trading, the non-farm payroll number day. It's just, you're not supposed to trade the reaction to it. Just let the market do what it's going to do. If you want to trade your 5-minute rules of engagement with the ES, that's fine. But if you're slinging stocks around, you're probably going to lose money, right? I don't know how we're going to close. We want to see where we close, and we want to see if we start building on things next week going into earnings season. JP Morgan starts it on Tuesday. So that's all I have for you. This is the weekend market video analysis. Charts while you sleep, week 3. I will see you on Monday.